Hello everyone, how are you doing? My name is Jeff from Edu Network, and today I'll be taking you through the standard IS 36 just to explain what it is with the different definitions, and we do a simple example. So I'll try and make it as simple as possible. All right. So what is an impairment loss? An impairment loss is an amount by which the carrying amount of an asset or cash generating units, which we won't cover now, right? If you want more on cash generating units, you can attend our classes, right? Exceeds its recoverable amount. So your carrying amount is your normal calculation that you know from your accounting, which is the cost less accumulated depreciation, right? Which works for intangible assets, which is your IS 16, or amortization, which is for the intangible asset. All right, covered by IS 38. So that's your carrying amount. So in other words, you are comparing the carrying amount versus, versus the recoverable amount. So for some of you, the recoverable amount is new, but carrying amount should be standard if you're doing accounting. The recoverable amount is what? Is the higher of fair value, the fair value less cost to disposal, right? Less the cost. So whenever you say less, it simply means minus. So you say the fair value minus the cost of disposal, right? Or value in use. So always your recoverable amount will be represented by the higher of the two. So you simply compare to say which one is higher between my fair value or value in use. Whichever is higher, that will become your what? Recoverable amount. And then you can then complete the what? The formula for impairment loss, which is carrying amount minus the recoverable amount. So what is, Jeffrey, the fair value? All right. Less cost of disposal. So the fair value, for instance, you want to sell your old TV, or you want to sell your microwave, you no longer want it, or your refrigerator. So what is your first instinct? Your first instinct is to go online these days, or you go to Facebook Market, right? And look at what price the others are selling that same brand. For instance, if it's a Hisense, its condition, how old it is. So from there, you get a better idea, right? At what value you should what? Place on your item or asset that you want to sell. So that is what companies should do. Whenever they want to then sell their assets, right? They will always use the market value, which is the fair value, because it is between knowledgeable market participants, people that understand, right, how to sell that particular asset. If you look at a house, right, you can't just normally sell a house. Normally you'd call a what? An independent valuator that understands how to valuate your house, place, position, condition, all those things. So that value that they will give you, that they will allocate to your house, is a fair value. All right. So you're always comparing the fair value versus the value in use. Value in use is another decision to say, should I, if I am to continue using that asset instead of selling it, how much would I get? So that's why it's a combination of future cash flows. All right. So let's quickly dash to the definitions according to the standard. Right. The standard says the recoverable amount of an asset, right? I'll skip cash generating unit, right? Is the higher of its fair value less cost of disposal and its value in use. So you're always comparing the two. So always remember, recoverable amount is the higher of fair value less cost of disposal or value in use. So whichever is higher will then represent your recoverable amount. Then what is the value in use? Value in use is the present value of the future cash flows expected to be derived from an asset. So In other words, the decision of a recoverable amount, you are saying, how much will I recover if I am to sell the asset now? That is your fair value. How much will I get? Now, if I am to sell the asset now in its condition as it is, how much will I fetch? All right. Or the other decision, what if I continue using that asset? Right. Remember, if you're using something, it's going to generate cash flows for you. All right. So you want the present value of those cash flows. Then you compare the value in use and the fair value less cost of disposal. Whichever is higher represents your recoverable amount. All right. And then you're going to compare that to the carrying amount. Then remember, the impairment loss is the amount by which the carrying amount of an asset, right, exceeds what? The recoverable amount. So impairment loss only happens if the carrying amount is bigger than the recoverable amount. Then you get a child called impairment loss. All right. So someone might be asking, so Jeff, how do I then determine if there's an impairment loss from a question, right? They're saying an entity. So the entity that you are currently like literally working for shall assess at the end of each, not when they feel like, but at each reporting period, whether there is any indication that an asset may be impaired, right? So whenever I think impairment, always remember carrying amount minus recoverable amount. Recoverable amount is the higher of the fair value, less cost of disposal or value in use, right? If any such indication exists, the entity shall estimate the recoverable amount of the asset. So when you're assessing, you need to calculate the recoverable amount and compare. So you test, all right? You are testing. It's like someone testing if the food is salty or if the water is hot enough to make a cup of tea, as we are in winter, right? So you are always testing. You test. We're not saying you calculate immediately, but what you do, you are going to test. So you compare the carrying amount that you already calculated versus the recoverable amount. And then if that formula is met, carrying amount is greater or exceeds the recoverable amount, then the child called impairment is born. So that's how you discover. So these are the different indications, right? I'll just read one. Okay, I'll just read one of them. Right. So if we go to paragraph 12, right, there are observable indications that an asset's value has declined during the period significantly more than would be expected as a result of passage of time or normal use. So we are saying the value of the asset, for instance, is what? Is declining. Okay. Or sometimes significant changes with an adverse effect on the entity, right, have taken place or are to take place in the future. So assets, right? Remember, assets are either tangible. You can touch this, or you can't touch. Copyright, trademark, patent, you can't touch them. All those are assets. All right. So impairment loss, by the way, also refers to both tangible and intangible. So when you're given a question, it will be addressing both tangible and intangible. It can come in either situations. All right. So we are saying that as long as there's that indication that maybe the value has gone down, remember, so the market is assessing. That's why the market will come with a figure based on assets that the company currently has. That's why you need to assess at the end of the year if the carrying amount is appropriate compared to the recoverable amount. All right. All right. So if you go to paragraph 59, it says, if and only if the recoverable amount of an asset is less, if and only if, so it's a condition, if and only if the recoverable amount of an asset is less than its carrying amount, the carrying amount of the asset shall be reduced to its recoverable amount. So that means now the new value of your carrying amount will no longer be the original carrying amount, but your recoverable amount that you calculated will become the new carrying amount. Then that deduction is an impairment loss. Right. Then the last thing that we're going to do before the example, an impairment loss shall be recognized immediately in profit and loss. It's an expense, people. So that impairment loss shall be recognized in the profit and loss. Always know that. So if you're given a question on disclosure of a profit before tax note, if there's an impairment loss, that will become your free mark under the expenses. So we shall do this example is from the FAC 3702 question 3, part B. So it reads as follows. So when you're doing a question, always start with the required. So it reads as follows. Based on the information provided above, disclose the following notes to the annual financial statement of Pop Music Limited for the year ended 30 June 2012. It's very important when you're attempting a question to look at the year end of that company. Very important. So we're going to do the intangible assets. All right. Just that part for 13 marks. Right. But here I will not address the question in its fullness. Right. I'll just address a portion on impairment loss. Okay. Pop Music is a company situated in Johannesburg, Gauteng, that specializes in the distribution of music in South Africa. The company has a 30 June year end. On 1 May 2009, Pop Music bought the rights to be the sole distributor of Rohana music in South Africa. Rohana is a world-famous artist from the United States of America. Pop Music Limited bought the distribution rights to her music for a period of 15 years, right, for an amount of 780,000. A residual value of nil was allocated to the distribution rights. The rights were available for use as intended by management on acquisition date. Okay, then they are saying during 2011 financial year, Rohana was involved in a major scandal in the United States of America, which resulted in a significant decrease in the demand of her music in South Africa. So that is the indicator. That's how you know, oh, okay. So we're saying there is a possibility that the asset is impaired. That's why it's called impairment testing. You test. Is it hot? Is it not? On 30 November 2011, the fair value less cost to sell is given there. Value in use is also provided. So I will not read the other part because for 2012, right? This one involves reversal. I'm not doing reversal now. Okay. So with this information, let's calculate our impairment loss. All right. So let's calculate our impairment loss. So the year end of this company is that one. Okay. And then we bought this on this date. It's very important to lay out your workings, right, in an orderly fashion so that whoever is marking can understand what's going on. All right. And it will be good for you. You can follow on what you're doing. So we bought this on 1 May 2009. So we're amortizing. Remember, this is an intangible asset. So it's a right. You can't touch it. So it's an intangible asset. So you don't say depreciate, but you say amortize. Okay. So the calculation will be as follows. You remember, it's cost less residual value over estimated useful life. So what do we have? We have the cost of that much over 15 years, right? Multiplied by, remember, this thing was available for use in the 2009 year, right? On 1 May 2009, right, to the end of the year. How many months is that? May, June. 2 months over 12, which will give us how much? 8, 6, 6, 7. Okay, so it's very important to have your timeline so that you won't get lost. Okay, so this is 2 months, May to June, right? Then if you come to the next year, right? If you come to the next year, you're going to have the same formula, which is your cost of that much over 15 years multiplied by. We had this right from this date until that date, which is the full 12 months. So it's going to be 12 over 12 months. Okay, giving us how much? 52,000. Okay, 52,000. And then we are going to then have our current year. So this is our current year. So we're just calculating for these 2 years to feed into our disclosure, right? Into our disclosure note. So here it's a combination of what? It's a combination of 8, 6, 6, 7 plus 52,000. Okay, that's your amortization at the beginning of the year, as I wrote. All right, because all these were the previous years. So if you say cost minus that, you are going to get your carrying amount of that. And then for the current year, we are also going to have the same effect. Remember, it's going to be the same cost over 15 years multiplied by 12 over 12, giving us how much? 52,000. So that will become your current year amortization there. Okay. And then afterwards, remember, according to the paragraph 9, we are supposed to go and test. So after doing all this, you go and calculate. You're going to go and calculate. So I wrote there on top, impairment testing. So impairment loss is what? Is your carrying amount less the recoverable amount. So we'll come here and say our cost was how much? Was 780,000 minus all the accumulated depreciations, which is your 8,667 minus 52, and the current year one, 52. All right. And then we are given, we are what? We are given here. So we're going to get what? Our carrying amount as 6, 6, 7, 3, 3, 3. All right. So that represents our carrying amount. Okay. Then for our recoverable amount, remember we said it's the higher of, right? Fair value less cost to sell. So our fair value is how much? Our fair value is 550. And then our value in use, yes. So which one is higher, people? So the higher one is that one. So that will come and then represent our recoverable amount. So you remember we said according to the paragraph, that if the carrying amount exceeds the recoverable amount, then we have a child called impairment. And that condition is satisfied here. The carrying amount is greater than the what? The recoverable amount. By how much? So that less that will give you how much? So it's that less that will give you 117,333. That is your impairment loss. So that impairment loss is one that you come and disclose here. So remember, impairment loss reduces your carrying amount, right? Because we are saying that's not the original carrying amount, because the company had recorded or recognized the carrying amount of 667, but the market is saying, no, your asset should be at 550. So you have overstated. So take it down to this becomes the new carrying amount. So there, this becomes the new carrying amount. And then shortcut, you can say 550 minus the costs, you get that. But for explanation purposes, it's simple. The depreciation accumulated at the beginning, accumulated during the year, and the impairment loss will give you the amount here. So that's how you approach and do a question on impairment. There might be complications in the future on the value news because they are saying there are cash flows. Right, so we'll cover those in the next videos. And if you want more information, you can contact me. Right, you can contact me on these numbers provided on the screen. Okay, we hold online sessions during the week for 2.5 hours. Thank you very much. Enjoy the rest of your day.